Hey guys, this is Vic from Grasping the Market and welcome to our market briefing for the week ahead. We made new all-time highs on Friday, and this opens the possibility of an outside bar for the month of June. Of course, we still have a few more days left, but the momentum that we're carrying into this upper part certainly opens that possibility. On the weekly, we've been a one-time framing higher. Actually, since the beginning of the month, the first week, we already took out the previous week high, and we've been going up, 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 taking the previous week high for 3 weeks in a row now. Focusing on the daily, we had on Friday, of course, an extension beyond the key 2962 level, which was the previous all-time high and was the top of the May bar. But the move could not be sustained, and we closed back below the key 2962 area, and that leaves the possibility of a potential daily excess. Every time we have a potential daily excess, we need confirmation. Nonetheless, the daily one-time framing higher for the whole week, and the gap in place that remains in place. So for the time being, in all three time frames, we're trending up. Moving into the market profile, we can discuss a few interesting details that can give clues to the market development. First of all, we mentioned in Friday's morning briefing that acceptance above the base of the late spike that we saw on Thursday was likely increased the odds that new all-time highs were going to be made, and that's exactly what happened on the A and B period. You can see, if I open it up, you can see that there was a little bit of back and forth, but the acceptance was created above that spike, and we only probed lower, immediately went back up, and that increased the odds, and that's exactly what happened. We took the high. However, and this is an important thing, the way we went up was not very convincing, judging by the amount of hesitation we had initially. Then we left a very questionable low, only 2 ticks excess on the low, and the wick structure on the way up. I don't know if you were there, but here we left on C. I mean, the transition from C to D, we left a 2 tick separation on the double distribution, and then D pushed up, and when we opened E, there was another 2 tick separation. So at some point we had 3 distributions, separated by 2 ticks every time, and little excess. That was very poor as a structure going up. So it was not very convincing. Obviously, we had a strong rejection, and I will talk about that into more detail in a second. But later in the session, we had some backing and filling. We repaired those distribution singles separations, and the heights were attempted again. But the move was clearly driven by short-term money, and the reason I said that is if you look at the F low, was exactly matching the C low and the open. So at that point, we had the C wick low, F wick low, then G, then H, all of them weak, all of them being bought from exactly the same level. That is not a coincidence. That's short-term traders buying the dip, buying the dip, buying the dip, and they started getting something done, but it was not enough. And the potential of this excess here being strong sellers manifested itself at the end, because when these weak buyers could not get the job done, the market came down, flushed down very harsh. So that was my other comment. The selling excess left on D seems strong and potentially indicates larger time frame sellers getting into the market. And if that is confirmed, this excess that we have here in the profile, and of course the daily excess as such, if that is confirmed, that will increase the odds of the market getting into at least short-term balance. Uh, Another important thing is that in these two periods, M and N, I don't have the data here with me to compare. I only have the Friday data. But if you compare the volume done on the underlying market, which is the New York Stock Exchange, for those two periods versus Thursday, there was a huge increase of volume in those two particular periods, which were going down. So that brings me to that point again, that if this is strong selling and it's larger time frame, and we saw additional selling here, now we could be towards, I mean, this could signal excess and the end of the trend of the auction up. Um, Now, the immediate focus is on assessing the continuation of this late break acceptance below the low left at 29.50 will immediately denote change and confirm the late break. The yeah, and confirm the excess left at the top. The daily excess will be confirmed, and we will be stopping the one-time framing on the daily basis. On the other hand, if we get acceptance above 29.63, which is the afternoon high, that will immediately challenge the excess, and it will bring into play the Friday high. Um, Again, we take that potential signal of selling with a pinch of salt. At the end of the day, we had overlapping to higher value, and we are fundamentally situated at the top of the market with positive news coming on the trade front and the Fed outcome. Now, the focus for this week, remember that at the end of the week, we start the G20 with that meeting announced between President Trump and the Chinese counterpart, and the market is being optimistic. But if any headlines suggesting blocks or suggesting something that is not going well with the trade talks emerge, the market could sell a bit and give back some of the recent gains ahead of the G20. Uh, we need to deal with this uncertainty. This is what the markets are. And again, anything can happen because odds are just odds.